Okay, welcome back. Let's put the spotlight in the paint sector now. And to sort of talk about this, we have Mr. Rajiv Rajgopal, Chairman and Managing Director at Akzo Nobel India, joining in. Mr. Rajgopal, good morning. Great to have you with us here on CNBC-TV18. Prashant this side. Let's just talk about, how demand is panning out in the second quarter so far. Did price hikes get absorbed? To what degree? Just give us a color, sir.
Good morning, Prashant. Good morning to you and the viewers. Yes, the price increase happened in two tranches. The first tranche was end of July. The second tranche was around the middle of August, 12th of August. It's too early to really predict because the prices were to a tune of about 1.5%. So it's not really massively significant. But yes, you did see a little bit of a blip during the price increases as you would, which is basically a little bit of stock up. Yeah, but we continue to sort of focus on driving our volume, like in the last quarter where we had a double-digit volume growth as a consolidated paints and coatings company, driven well by both the paints and the coatings verticals. We continue to be making sure that we are driving our key categories, particularly with focus on premium, making sure that we are competitive in our mass and economy offerings in the paint side, and on our coating side, making sure that we are able to give better value propositions to our customer across our businesses. So suffice to say, Prashant, that initial months, I think it's better than the last quarter, if you ask me, but we've still got a month and a half to go. So, it's too early days to really give you any projections for the quarter. For the full year, we still remain committed. We are still saying that we will deliver a double-digit volume growth for the year, for the fiscal, and we continue to see a mid to high single-digit revenue growth.
I mean, mid to high single-digit revenue growth. Volume growth in 10% plus?
Yes, volume growth I do maintain, and as we've also demonstrated in the last quarter, will be double digit. It'll be 10% for sure.
This is now the festive season all the way to the end of the year, and this will be a busy season for you as well, right? Is it too early to gauge whether, it's really sort of demand inquiries, etc.? Is it too early?
It is a bit early because really,
okay.
I think you normally start seeing the uptick in the first week of September. So September, October, this time Diwali is a little early. It's in the end of October. So that's when you will really start seeing the uptick. But yes, it's slightly better than what we saw. And I do think that the consumer sentiment, both across urban and rural, is a little better than what we saw in the last quarter.
Okay, so that's the outlook on the volume growth at the top line, Mr. Rajgopal. Hi, morning. Let's talk about profitability and margins as well. And I think the question on people's mind is whether this price hike has been well digested, whether you'll attempt more price hikes as we get into the thick of the festive season, and whether the margins can be sustained. I think first quarter you were close to 16%. So what's the margin trajectory looking at input costs for the rest of the year?
So we believe at this point, Surabhi, that look, we see approximately about a 2% increase in the raw materials. So we are ballpark there on the price increases, and then we obviously will look at some of the commercial excellence initiatives to make sure that we continue to remain in the same band. As I said, our endeavor is now to hold our EBIT margins. We were one of the few players really looking at both sourcing initiatives and cost initiatives to make sure that we delivered a profitable quarter. So we continue to be focused on that journey. Yeah, but I would still say a little early days. The competitive activity is yet to heat up because the season really, in a way, would start between September and October, and that's when you will really start seeing the next sort of signs. So far, from what we've seen for a month and about 2 odd weeks, I think it's fairly okay. We would believe that we are still on the journey.
Okay, speaking of competitive intensity, that's been the talking point in your sector, right, sir? So what is the sense you get? And you have your ear close to the ground, close to the business. Again, back to the question on price hikes. I think everybody took notice of the price hike because it happened when so many new big players, deep-pocketed players are coming through. So again, the same question, would you expect some more price hikes to be pushed forward? Or is it too early to say? And also tell us about market share, since we're talking competitive intensity. You want to sort of rise up the ranks on the premium segment side. So what's happening with market share?
So first Surabhi, to the question on price hikes. See, at this point of time, what the sort of inflation on the raw material side we seem to be covered. We'll have to see how the vagaries of the commodity price moves in the next few months, and then accordingly we will have to take the decisions. We want to make sure that we are maintaining our competitiveness while we take the price hikes. We are already a premium brand, as you're aware, and so we want to be extremely careful of the fact that we don't want to. So that brings me to market share. Look, I believe that we are getting market share. We are closer. We in the paint side, we were at about 4.5%. We have all the way moved up to almost 5. If you look at, we are in the top 2 now over many quarters. If you take a 2 years also, we are in the top 2 in terms of growth, right? And not just growth. Remember, we are a challenger brand. So it's also very important for us to maintain profitability as we start getting those growth. So really, a tough act, but yes, we are up to it. We put our strategies in place, and so far, as we've seen in the last quarter, we seem to be on course.
Got that. 2 questions. In terms of touch points and distribution, where are you at, and what's the target by the end of this year? And on market share on the premium side, where are you at now?
So first on distribution, Prashant, we were at about 22,000 or outlets. Our first target is to cross 25. You see, our definitions are a little stringent. So when you hear this, we look at outlets with a certain minimum amount of revenue. So our metrics are a little different from how the industry looks at it, and that's only because we want quality outlets. Given the fact that, as I mentioned, we are a challenger brand, so it's very important to make sure that your value per outlet. Yeah, and the same store growth is also kicking in as we start expanding. And your second question was, Prashant?
Market share in premium segment. And what would you like that to go up to? I think you were at about 16-17%.
So I've said we'll go up to about 30,000 outlets. In terms of premium, yes, that was your second part.
Yes, yes.
17% market share. Look, we are continuing. Our premium is really growing, and that's born from our contribution margins. You see, we've got one of the highest contribution margins, gross margins in the industry, and that's what has also sort of been accretive to our margins that we've delivered. So we continue on the track. What have we done? We've launched, for example, a super premium, uber premium product called BT Eterna very recently. We've just put it in Delhi and Kolkata. We'll be coming to Mumbai and some of the other markets very soon. It's going to be a paint with a stroke unmatched. I can tell you because we've tested it enough, and this is really for consumers who are very discerning taste, and making sure we continue to serve the high-end customers in a manner that they would like to. So that's really the focus, Prashant, if I've answered your question.
Prashant, are you painting your house this Diwali? It's for discerning consumers, so there's some thought.
I'm hoping that all of you paint
with 2 kids, I've decided I should do it once every decade. There's no point. Otherwise, I'd be doing it every year. But Rajiv, it's a pleasure. Thank you very much for joining us, and great conversation and great speaking with you here on CNBC-TV18. So that's the perspective coming in from Akzo Nobel.